I'm just going to be doing a trade review for the last week of July. Um, the last week of July was a good week for me. I had around 100% win rate. This July, the month of July has been good, as you can see here. Um, had a pretty consistent winning month, um, which is great. But yeah, I'm just going to be reviewing this final week of July, which I managed to get funded this week on a 10K account for Alpha Capital. But yeah, we'll just get into the review, and I'm gonna break down why I took the trades, if I'll take the trade again, and yeah, just break down my strategy and stuff like that. All right, so this was the first trade we took on Monday. So just off the fact that the hourly trend slash context is not marked, this trade I did give you can see my ratings here, a 3 out of 5. For my strategy, I don't need really the trend slash the context. It doesn't need to be in line with it. I do need kind of like the context, and by context I just mean, so if we are bullish and in a bullish trend, I still can take shorts depending on the context, and context is pretty much the range, so where we're sitting within the range. Because when we are trending bullish, the market moves up and down. So when we're trending bullish, we have highs, higher lows, higher highs, higher lows. So depending on where we are, we could identify that we are in the higher low or creating a higher low. So that's why I can take. The trend is not as important in my strategy. In terms of entry, it doesn't need to be within the trend. It is important in the sense that just to identify where we are, but it's not needed for me to enter. As I start my trading days, I like to start in the hourly. And truthfully, as I look back, the hourly trend in the context is quite bearish, in my opinion. It's kind of like a sideways, moving sideways, not clearly bearish trends, but like as we zoom out, you can kind of see that we are bearish. If I was to draw this line right here, it's clear that we are kind of like moving in a downtrend. And something I like to do if I'm not too sure is I like to go to the 4 hour. It's a higher time frame. If the 1 hour is not too clear, just to see what we're doing. And it's clear that, okay, at this point right here, right? At this point, we are bearish, right? We don't need to overcomplicate it. Zooming down, we go to the 30-minute. So at this point, from yesterday, we started to make some bullish moves up, especially with this move. Drop down, we made some more bullish moves up. At this point, I was just looking for a range. So what I like to trade is just the ranges within my ideal times, which is Asia session and London. And this was a range created right here. The reason I did give this a 3 is because I just feel like there was a lot of things telling us that the market wanted to sell, and I still took the buy, and it worked out this time. But in another time, it may not have worked out. You see right here, we had the new weak opening gap right below, which is a big liquidity draw, which price really likes to go into. So I would have probably wanted to align myself in a sell to get into here. But at the time, I saw this range. So if we go to our checklist and our trading plan, which I'll just bring here. All right, 30-minute range. Yes, we have that. We have the 30-minute range, right? And before I even look at the 50-minute confluence, I go to the 5-minute to look for a 5-minute TLC entry. What is a TLC entry? It's something that is used, but it's like I just have my own name for it. It's TLC is just trend retrace continuation. So TLC for me on the 5-minute, and this is my entry confirmation. This is like the confirmation on if I'm going to enter or not, because other things can happen on the higher time frames, but the lower time frames, especially the 5-minute, is where I find a clear indication whether I should get in or not. I can see everything align on the higher time frames at 30 minutes, but if the 5 minutes is not showing this entry for me, I won't get in until it shows it. So What a TLC entry is just this right here. This is one I entered on. So it's just a, all right. So TLC entry right here, where this is when we're within our range. So we're bullish. So we're looking for price to get below the 50% for us to buy back up. So once we hit this level, which is the 50% right here, we even go deeper. We go to the 0.7. I looked for this high, lower high right here, and then a close above this body. That's my entry. A high, a lower high, and a close above this body right here. And then I place my stop loss right here. And typically I go 1-to-1 at, I go break even at 1-to-1, but I actually got out exactly at this high. I think you could see it on my TradeZella. I got out at the exact top of the high, just because I knew that things were kind of against us, and it's not a trade I'm looking to hold. It's just a scalp. I typically don't hold extremely high RRs before I enter. Right, before I consider this a valid TLC, it needs to move from a 50-minute confluence. So it needs to be, we need to get that TLC, right, that entry from a 50-minute confluence. Yep. So like I said, this was a candle which closed, so that would be our entry, right? If we're looking at the 5 minutes. So if we were to look at the 5 minute, okay, it formed. The TLC is about to form. Where is it moving from? Then I'll look at the 15, right? It'll be right here. This is a 15-minute order block. We also have this order block right here, which price is also respecting the 50% self with the wick, but we're going to use this one. Right, on to trade number 2 for the week. So this trade was a great trade. I rated a 5 out of 5 on TradeZella. It was a break even. And yeah, so our break evens do hit 1-to-1. So break even just means that we did hit 1-to-1, but we didn't came out and hit us out of break even, pretty much. So every single break even means that we hit 1-to-1. All right, so we had everything we needed to see. I rated this a 5 out of 5 for my strategy, and here is why. So 1 hour trend in context. Obviously, as we look at this chart, we can see that we're bearish. Right, we are bearish. We don't want to overcomplicate it. Right, price is moving downwards. It's clearly showing that. And if we were to zoom out, you can clearly see as well at this point that like we're in some choppy price action, but I will still consider us bearish. You know, this in the hourly at this point, you know, we are in like, I would say kind of like a sideways downtrend in my opinion. So I'll consider us bearish. It doesn't mean we only take sells. It just means my context and the way I'm viewing the market right now, the market is bearish. So it's just some things mentally which I will have to keep in mind. It doesn't mean I only take sells or I only take buys. You know, so looking out, I know we did just sweep this liquidity, but for me, even if we do sweep liquidity, that doesn't mean like I'm instantly taking a reversal or that I'm holding off. No, I'm just following what the market shows me, right? As we look at the 30-minute, so this is just, let me maybe dim this a bit. This is just telling you where my entry was. This red line around where my entry was. So as you can see here on the 30-minute, we have this bearish range, very clear one. Huge sell-off. We want to wait for price to get back into the premium zone because it's a sell. The premium zone, what is that? That's just above the 50% for the sell. So anywhere above this level, that's what we're waiting for price to get into to start zooming in on the 5-minute to look for our entry. Right, so price did end up doing that at 8:30. Right, but remember, for me, before I go to the 50-minute, I use a 5-minute. Before I really identify the 50-minute, I use a 5-minute, and I wait for the breakdown in structure. The breakdown in structure is just a TLC. So breakdown in structure just means that we are switching from a bullish kind of context and structure and breaking down into bearish structure. And clearly you can see here we have our high, we have our low, we have our higher low, and then we're closing below this body, below the body of the low that was just formed. Boom, right here. And we close. It can change, it can vary. You can wait and look for the retap, but a lot of the time I just like to wait for the close because it can just run a lot of the time. So that was my entry right here. But before I even entered, I went to go look at the 15-minute. Where are we moving from the 15-minute? All right, perfect. So the 15-minute has this order block right here and a fair value gap right here. So it's a double confluence, really, giving us just more indication as to enter. So it's moving. The candle that closed, which is this candle, is moving from a confluence. So considering that, I am okay to take the trade as it had. We had the 1 hour trend / context. We had the 30-minute range. We had the 50-minute confluence. We had the 5-minute TRC. So yeah, and this would have been my full TP. My full TP is always the range low. So usually I'll trail to the range low. But price came to 1-to-1 and then came and took us out of break even and then continued down, but that's okay. Charge it to the game. But yeah, this is a high quality setup for me. All right. This is trade number 3. Also I think I rated this one as well, a 5 out of 5. Hourly trend. I don't like to overcomplicate the trend, right? I understand we had a liquidity sweep right here. This is where price is likely going to start seeing some rejection or start seeing some consolidation, which is what happened. But I trade out of ranges. So even within consolidation, it works. Within trending markets, it works, right? So with the context of just what I had here, as you can see, this it's a bearish trend. I'm kind of looking to see price just continue lower because this is all I saw at the time, so I'm just trusting in my analysis and it works. So we had the hourly trend in the context. So as you can see here, bearish. We really didn't have much context. All we see is this. We have our range. Price got up into the 50% of this big range. We also had the Asia Open. So this is also a range here. This is where we opened, right? On the 30-minute, this is also a range, and we had a new week opening gap, which is a high liquidity area. This is an area which price can reject from, price reaches up into. So I do consider that a range too, but with the support of this bigger range, I was happy to consider this a range. From there, we go to the 5-minute before the 15. But yeah, that was the entry. But before I'm getting ahead of myself. Before I even enter, I need to look at the 15-minute, find the confluence in which we're moving from. Fair value gap. You see, we're within this candle right here is within this confluence. It's a fair value gap, and it's also a new week opening gap. On different charts, I'm pretty sure this was a new week opening gap. I think, yeah. So it's a new week opening gap. All right, at this point, we're okay to enter. So I'm happy to enter, and let's see how it played out. Full TP hit. All right. Trade number 4 of the week. I think this was the last trade of the week. This was the last trade of the week. This is a trade that got me funded. So, like clockwork, hourly trend. This one is very clear. So, hourly trend, context, bearish. Doesn't mean we're looking for sells, but it just adds context, right? And if we are taking a sell with the knowledge of the trend and the context, it allows us to know if we should hold or not hold, or just these small intricate things. All right, so then we zone out to the 30-minute. If you look at the 30-minute, simple range. It's a Very simple, right? And here's our TRC right here. This is a very intricate one, but it's definitely still there, right? It's definitely still there. This is the one we entered off. Right here, stops about this high. High, low, higher low, close. As you can see, minimal drawdown. Very minimal drawdown. I think we only needed a certain amount to get funded, so we didn't hold the whole thing, but I would have held and trailed the 5-minute high. So I would have trailed my stop loss to here, and then I would have hit here before it would have taken us out. So that would have been a very big trade. But you can see, depending on the range, the trade size can vary. But before we enter, sorry, I keep forgetting, before we enter, what are we looking for? Yes, 15-minute, right here. 15-minute confluence. Clean, easy. It's so simple.